The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Basil Chapman, this is the 9th of January, and in fact, being a Thursday, it's a lot to cover. And not to cover for a couple of reasons, but the most important one is that the Dow for the second day has had a very, very poor performance. This is, yes, 30 stocks as opposed to the 500 or 2,000 or 3,000, 4,000 of the different indexes. But it's really important to take note of certain things that I'm looking at least. And secondly, the volatility index has started to move higher. Not a big deal, but it's something to keep in mind. Now, all the Dow had to do, and then I would have been as comfortable as anything, was go 28 points higher the other day to get to that leg D. It didn't have to do that. I have an alternate count, which is just as legitimate. It's a peak F or a peak C, and the peak F goes back to the it goes back to what I would call the instant restart back there, that peak A back in November. But even more important, I like to say that price is the arbiter of the trend. You can have all the technical indicators you want, but if the price doesn't perform the way it should, instead of going up, it goes down, you have to look at it, and you have to look at it as objectively as possible. For me, looking at it objectively as possible, I discussed this yesterday, it hadn't happened yet, it's happening today, is that I had mentioned that from December, right there, from December the 18th, where the Dow broke above the 9-period exponential moving average with that fantastically huge up move that even took out the 16,174 high of the 29th of November. That was really important, and because it also formed what I consider to be a potential Chapman wave cup and handle breakout, it should go to D, and that's the D that was just missed. That was on the 7th of a few days ago, on the 7th, where the Dow went up to 16,562.32. It needed 27 points, less than 27 points, to make an all-time high, to give me that D that I really wanted to see, because it just made it a lot easier, and it didn't. So now I have to consider that we could have made a top on the 31st of December, and we've broken below the 16,390 area, so I'd say 16,390 to 16,350. That 70 is the next level. 50 really confirms it. A break under that, and this is a market that's starting to have real problems. Let me also just quickly do this, because I talk about my Dow quartet. GE has been acting terribly. It made a high on the was that the 31st or the 2nd? On the 31st of December, made a high of 28.09. Peak D, this is a peak E, possibly in the weekly. Almost certainly it will not make a new high tomorrow unless something spectacular happens. And even the monthly could be putting it in. So what I've been looking at, and I said to subscribers this morning, in fact, bullet point number 18 was, next week we will likely be including shorts, but need to let the longs flush out first. Well, the longs might be flushing out. We'll see. Even more important, you've got, it's a little slow. I'll get there. So GE, not good. IBM, that's a peak C, but it's way underneath the previous high. So this could fail at any point. So this doesn't count as a new high that has to go to D. Look at Triple M. Triple M, peak D. Everything's just right there. On the 31st of December at 140.43. 140. Oops, I shouldn't have done that. Running a little slow there. I won't type it in now. It's going to make things a little confusing. 140.43 in December 31st, trading at 136.29 right now. Potential peak D daily, peak F weekly, and a peak E monthly. Basil, why not just wait for a break of the 50 DMA for confirmation of a trend change? No. I don't. 50. Normally that would be way too far down. No, I would be doing it way quicker than that. In fact, I usually have an alternative. For some reason, I don't know what was in my mind today. I did not put down that if the Dow instead, I did say it in my overview, that if the Dow was not up 60 at noon, but instead down even 20, that would be a negative connotation. And I should have acted, rather than reacting, I should have acted on that particular information. Why? Because the MACD is crossing negative, stochastics crossing negative in some of these areas. So triple M, same thing. And now the final one, my pilot light indicator, is UTX leg D. Leg D right now with an all-time high. See, there have been so many conflicting things just on the shorter term that I felt that I needed to have all the little ducks in line, but the rotational aspect makes it a little confusing when you see strength in one area, very, very strong in some areas, and then a lot of weakness in others, and all of a sudden, earlier today, I looked at United Technologies at 114.23 at an all-time high, making January still leg E as opposed to the others. I'd say, hey, that's my pilot light indicator. The volatility index wasn't going anywhere. This is a leg D in the weekly, so I'm still going to watch next week, but at least in the short term. And now all of a sudden, that's a very ugly candle. Let me look at something else here, the volatility index. And then we'll go through all the numbers. And thanks for a great show, Steve. 2 great hours leading us in. You're at TFNN. Don't forget, after me comes the Thursday edition of Larry Pesavento. This is a different one because it talks about commodities, more about commodities and the futures. And, of course, we've got a program all the way through. You've got Daryl Martin, Dave White. You've got... oh, that's right. We've got a great show at 3 o'clock, and that's going to be very interesting because we'll be looking at the different commodities. And when you look at the commodities, we're going to have a whole bunch of perspectives. I would like to go through commodities now. So we're going to have 3 views of commodities over the period, at least that I can tell. And Andy Hector will be going through that at 3 o'clock. I'm going to go through, if I get a chance today, I want to go through a number of the commodities. I want to do, and then of course, you've got Larry, and then you've got Andy, and then I'm sure Tom will be talking about the different commodities as well. So that's going to be very interesting. We'll be looking at it in great depth today. And, of course, Tom O'Brien, 4 o'clock till 6 o'clock, wraps it all up. A quick question about copper. I want you to do copper, so let me see. Dow's down 76 at 16,386. The S&P is down 619 at 1831. You got the comp index down 20 at 41.44. Gold is just up a fraction, up 50 cents. That's nothing. At 12.26. I'm watching gold real closely. We'll look at that when I get a chance. High-grade copper is now down to 3.29. Wow, these are quick movers. Let me tell you something. Bonds are up about a half a point at 129.06. The dollar is now down, making a peak A, a very strong single leg A to the upside. And you've got the euro up just a tad. And we're going to go right now to Garo in Newport Beach, California. Hi, Garo. How are you?
About you?
Hi, very good. You wanted to look at?
Apache, APA.
Okay, now I have no idea why APA has no notation whatsoever on it right now. It's very, very frustrating, and it's running slow. So
Very much. And this is not. It's an oil company. Is not acting like Exxon, Chevron, or Phillips 66. It's like it's so depressed, and it's sitting there. It doesn't move above the regression line.
Yes.
And it just goes up just a little bit from regression line, and again goes from regression to 200-day. It doesn't cross down 200-day, and it's right there doing nothing. Do you have any idea why?
I do not know why. I looked at it the other day. That's why I'm a little surprised that I don't have the notation on it. I know what happened. There was a day where I suddenly had my computer shut down, or it had to close TradeStation for some reason. and it lost a bunch of that information. It's there somewhere, but it's on a different, I call it a platform, but let's call it the library itself. It's a different library. Now, Apache, when I looked at it, this used to be such an incredible stock, a real winner, and it's been acting, as you say, very poorly for some time.
Right.
Something is going on technically within the company, or it might be technically within its product line, and it's being representative by the stock. Now, my impression is that you're looking at the short side.
Yes, sir.
Yes, I'm with you. I would be looking at the short side. It is making the H that goes to an M pattern, so I would do it. Be prepared that it can bounce at any point, but that doesn't mean that it's going to take out the high of 3 days ago of 87.91. APA is trading at 86.06. Are you already short?
No, sir. I don't know. I cannot short now because it's out of short, and
right.
I cannot go long because it's acting very poor. So
right.
I'm just watching it. Between the other stocks that I go short and long, I just watch this on my radar screen.
Okay. Let me just tell you something. The 85.53 is the 85.53 to 85, right. Around about 85.20. Let's call it 85. That is going to be really important. If that gets taken out, then the low of 84.15 from the 18th of December becomes really important for three reasons. One is the daily chart has the H pattern that, from the way it's acting, looks like it's going to break down. If it takes out 85, I would not be surprised to see it take out 84 as well. Number one. Number two is that the weekly chart, it keeps getting repelled by the 9-period moving average, and that's that H pattern that I always talk about, and especially in a weekly chart with very poor MACD, the stochastic is trying to flatten out at 19%, but it hasn't helped the stock at all. So if it takes out 24 in the weekly chart, there is very little support. That's my big concern with the number of stocks that look like this. There is very little support in the weekly chart, and the monthly chart, as you say, has really not been acting very well. It's not bad, but for this kind of stock, it's really very poor. It's right. One of the weaker links. I agree with you. And in fact, what I would suggest, if there is a bounce at any point that can take it to 86.35 to 86.48, right. I probably would say that's a good time to think about shorting if it turns around on the 120-minute chart after hitting that level and starts to turn around. I would recommend shorting it at that point. So on a bounce of about 40 cents, 50 cents, if it starts to fail, then I personally would consider it a short, and my target would be between 85.50 and 84.10, at least very short term. Hope that helps you, Garo.
All right. Very good. Very good. That's guiding. Thank you, sir.
Thank you very much. Folks, we'll be back. Basil Chapman, Tiger Technicians Hour. Dow's down 68, S&P's down 5. Trying to find a little stability there. We'll look at other things very closely after this.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I had a question to Dan. Google, is that a G or is it a C? I've got it a G/C. Made a high yesterday of 1147.32 with an opening round number of 1146. Round number open. I can't believe... Oh, I'm typing in the wrong place. I think 1146 is what I said. 1146, round number open. That was yesterday. Goes to an all-time high of 1147.32. Let me type that in so we know what we're talking about. 1147.32. Okay. That's the other thing I need to fix here. Folks, I am having an issue of 1147. Again, it went to the wrong bar. This is what was supposed to be fixed. 1147.32. There we go. Okay. Very ugly candle today. Day is young, but we are down 1190 at 11,290. 129.35, down 1190 on Google. It's a leg D in the weekly and a leg E in the monthly. So at this particular point, I would have to use the 120, and that also is going to be a very big clue, because I've got this as a leg D that went to a peak D. Just have to double check. I don't want to do anything here just off the cuff. I need to know exactly. 1139.63. 11. Oh. So that has to be called a phantom peak. It's not a real peak. And that's a D. So both of those are going to have a different color. But everything about the technical say I can use it. It was just a fractional new high. And I can put in a down arrow. No, I can't put a down arrow yet. I'm watching this. What I'm looking at is that more and more stocks are doing exactly this. They're making round numbers at highs, even though they go a little higher. And that's telling me that there are people that are just so intent at either getting out or getting in that they are prepared to give up those fractions. They say, 1146, I want in or I want out. And when I see that, I say to myself, okay, we're getting to, no, I wouldn't really call it the hysteria side of it, but definitely it's the area that says there is either a determination or a fear of missing out, a determination to get in and get out, but there's fear. And I watched it very closely. So now let me just run a couple of things. Look at this. I'm going to do the continuous contract of gold. If you look at the weekly chart, because Friday tomorrow will be very important, gold has taken its time coming down, a very long period from the previous high of August the 8th, back at 1434. It took all until last week to get down to where the 1180-140 area, which was just above the previous low, a major low, yearly low of 1179 on the 28th, week of the 28th of June. To me, that says it's a good sign that you're using time, you're usurping energy and time, but you're not giving much away in price. Because look how long it took you to get almost another 50% as long as it was to go from the bottom, 1179.40 to that peak B minus. So I look at that and I say that's one positive. The MACD is acting quite nicely, but Friday I need to see it close positively, and so far it's just flat. And the stochastic's gone from single digits. No. The MACD in the weekly chart has gone from almost single digits to 1050, from 1052 to 18.60 right now. Not great at all, but not bad. That monthly chart still looks to me like it's a very negative chart. It is the shorter term that has said over the past couple of days, especially some of the gold stocks, that the gold stocks and some silver stocks are starting to act independently superior to the price of the metals. We've spoken about that divergence for years. I mean, I probably for at least 10 years I've spoken about that. It goes back even further, because I've always looked, because I've looked at the XAU so intently. I had a buy signal at 44. I think it was December of 1999 or 2000. I got it at that low. I've looked at this so intently because there have been periods, and I got to this because I used to do on-balance volume that Joe Granville used to teach. Well, that was his major thing. And my assessment was that sometimes in on-balance volume would lead a stock higher, and then the price would follow because there was a build-up of volume. And other times it was just like Sears used to be totally independent. It would just suddenly take off by itself and volume would follow. Or Eastman Kodak as well. And that's a little bit like gold. I'll talk about that divergence between the XAU and the price itself of gold stocks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, just a real quick question to Den about Sony. I guess they're doing something with TV, Cloud TV. Sony had a big spectacular news-related, looks like a news-related move. It's at 18.05, down 20 cents. It better hold 1780 to 1760 over the next week, because if it breaks that, that's the real problem. But it'll be very positive if it goes above 1832 for leg C in the daily chart, and that'll help the weekly chart. But I only see it in a trading range. I don't have a signal to say on the upside there's anything really strong yet. More likely, I'm actually looking at it if it starts to break 1740, that'll be a very poor sign. So let's go back to gold. So now if you're looking at the XAU, let me just get rid of this here for a moment. Take that away. If you're looking at the XAU... boy, slow. Not sure what that is. Not sure if it's my computer. I like to be polite and blame my computer. There you go. XAU first before I blame any software programs. Dollar XAU. That's gone to a peak. See, I'm a little concerned about some of these patterns that I'm seeing in the gold-related area. You see the XAU, this sharp move down at 84.65, it's down 1.12. That's just a little too deep for me. The day's young. But if it held 85.24, and preferably didn't even get to 85.24, but if it held that level, and then by tomorrow or Monday started to move quickly to the 86.90 to the 87.10 area, I'd be saying, whoa, that is really good action. pulling back like this, especially when the weekly chart looks so pathetic? Is this the best you can do after a low 4 weeks ago? This is the fourth week, and you've barely moved. You've gone from the 79, or let's call it 80 level, to the 88 level. That's it. Look at those moves. Look at that big. Look at that. 1, 2, 3. By the third week, it was already huge, from 82.29 up into the 93 area. That was back into the summer of last year. So I'm not that impressed yet with gold. I like some of the movement. And then the XAU monthly has gone to a leg F to the downside. Let's do, if I can get this to work, HUI. So the XAU's, that's the Spider Gold Trust. So was that right? XAU. GLD is the Spider Gold Trust. XAU is the gold, one of the gold indexes. Arca Gold Bugs Index has gone to the same thing, a peak. I'm going to put in an up arrow because it's it's not 70%. Well, I can't put in anything right now because everything's slowed down. Doesn't happen often, but when it does, it is really frustrating. So there we go. A, and now I've got to wait before I put the B. There's the B, and there's the C. No C minus yet, and because it's gone to a C, I will put in an up arrow just because the MACD is looking good. But look, that action here in the weekly is kind of okay, but it really isn't very positive. Right now, it could be by Friday afternoon. It's the weekly chart. So I'm saying that there's something going on here, and I'm not sure if it was really a gold breakout. I think gold right now, instead of the GLD trading at 118.10, it really should be trading at 122.80, 123.90. That's just the way I'm looking at it here. So I don't see it as being of great influence. The GDX, now that's not to say that I'm not trying to buy certain gold stocks, because I think if I can get them lower down, they give a much better risk to reward, but really much lower down than they traded yesterday. Same thing with the GDX. If the candle by tomorrow afternoon can close nicely over the weekly chart of, let's call it, is it 21.46 now? If it can go to 22.30, for some reason gold is up instead of being down usually on Friday, it's up $17 to $25. Maybe we can get that GDX to act a lot better. I'm just not that impressed right now. In the Danny says Rand Gold, I think that's GOLD. Yeah. Wait. Rand Gold. Oh my goodness, just broke down. It's at 59.44. Now, why on earth do I not have all this notated? This is getting to be very frustrating, TradeStation. I'm not happy at all. And it has to do with when things shut down, it doesn't automatically save. I find that unacceptable. It used to do that years ago. I don't know what's happened. So I'm grumbling. Now I'm making it out there. I'm really upset. I'm going to get to them straight after my show. So Rand Gold is trading in the monthly chart underneath all the support. There's nothing here until you go back to 2010. So I'm looking at this and I'm saying, wait a minute. I'm not quite impressed enough with the gold. I have been calling it a bounce, and I have been saying that I believe gold will be going lower over a period of time, even though we could have some pretty decent bounces. This, for some stocks, has been pretty good, and some stocks are holding very nicely. And that's really part of the bifurcated, TradeStation's got nothing to do with E-Trade. TradeStation is a separate unit. And in the main, I have been very satisfied with them, except for this years now. It's been going on. I thought it was being fixed. I have not updated to the latest version because there was a problem. I don't know if they've corrected that problem. So, look at this. Everything's slow. So, I'll just keep talking. So, let's just look at this. Let's look at GG. GG monthly chart. Now, there again, you've looked at an arch formation going all the way back from the summer of 2008, all the way from the 12 area to 56.31 peak D, the second peak D. There are three right on this page alone. Folks, these peak Ds are so important. That's the reason why I was expecting that there was a chance that we could get a D in the Dow over the coming few days. we don't need it because I've already got an alternate count of an F. But the SPY is exactly the same. It just looks like it needs it for some reason. I don't quite know why. So we've got D in the gold core monthly charts. It's gone to a trough D, and then it broke down. Now it's gone to a trough E. And that trough E, well, I can't say it's a trough E. It is a leg E down. If all the way through January it doesn't take out the low of last month of December, then it's going to become a trough. And when it's a trough, look, at every one of these troughs, you didn't get this pathetic little move like that. You got a beautiful, strong candle to make the V-shaped bottom. Strong candle, strong candle. Pathetic little thing. Well, it's only the 9th day of January, so this is very early. Perhaps if something happens and there's a very nervous market that says, let's go to gold because it's a safety, gold becomes a harbinger of ill economic news, and essentially becomes a safe haven, as it has traditionally in Europe and many other countries of the world over the centuries, then you would want to see a stock like Gold Core go from 20 to 56 above the 9-period exponential moving average of 25.82. So that's what I'd be looking out for. Now let's see. I wanted to go to copper. So in other words, just to sum up, I'm looking at gold, and I'm saying, yeah, there could be there's a very nice rally in some stocks, not all, but some stocks. I'm looking at it as if to say it could be a counter-trend rally of quite a few weeks to the upside, but it needs to break out to new recovery highs, and it needs to do it soon. Now I'm going to look at high-grade copper because, I make a big deal about copper being stuck in the range that's looking like an arch going to an H going to an M formation, lowercase h to a lowercase m. And look at this. This is the weekly chart. It'll expand in a minute. There you are. See, there it came straight down. It made one H. It's made a second H with a successful test way above the low. That was good. But then you've got to break out to a new high and stay there. You can't just pop up to a B/E and then pull back. It should have gone to the 3.49 area of the 200-period exponential moving average. I don't like that. I don't like this action. We own a copper stock. There's a good chance we're going to get taken out for a couple of cents profit, but it turns out to be a good percentage. But that's because it's so low down. But I'm kind of disappointed. Well, the week's not finished. This is a weekly chart. If by next week copper's able to get to above 3.4953 for whatever reason, I don't care what the reason is, I'll be saying that is a fabulous move. That has now put the copper in an uptrend instead of this constant trading range between just above 340 and then holding above 3.1. It never used to do that. It went all the way to 3, but lately it's been going to 3.1. I'm going to be watching copper real closely. I wanted to also look at a couple of other, if you don't mind, commodities. SB is sugar. SB's broken down. SB broke down in the monthly. SB sugar broke down in the weekly. Terrible. Went to a peak D and then plummeted. And now look what's happened. You've got an H pattern, and it failed to go back into the arch. I'm watching commodities, and I have to tell you something. I'm just wondering if we are looking at a change in trend in commodities. Look at USO. Look at that. A peak D. Oh, folks, remember, I have respect for my peak Ds. Look at this peak D doji at the top there. In fact, it almost became an island reversal. I wonder if it did become an island reversal. Pointer. 35.82 was the low, and 35.83. Oh, by 2 cents. So almost an island reversal. And then this is that pattern I call the Eiffel Tower. Straight up and straight down. Takes out the left side low. If it breaks under, come on, stop being so slow. Oh, we get used to, remember, this is how computers were right in the beginning. You always got the hourglass, every single thing you did, and you'd have the patience. And you said, I used to download from Friday at the moment the market closed, and the download took me for the 5,000 or 6,000 stocks and commodities and world indexes, etc. It used to take me until, I think, 7 o'clock on Monday morning before I could actually pick up the charts and start doing my work before I had to make a call. That's how long it took to get all that information down. So now what we're looking at, 32.94, and the low today is 32.90. We've taken out the left side low in crude oil. I think I heard Andy Hack talk about the SCO. I don't know if he's still long, but if he's still long, that is a brilliant move. You're about to make a leg D in the weekly chart if it goes above 36.61. So that is one big slam to the downside. And that's why I'm saying I'm just wondering about this whole commodity thing. I wish I could get, maybe someone in the den can remind me again, what can I get for anybody have TradeStation, what can you get for the commodity chart? I used to just get it right away. I used to go #CRY.X, and I had it going way back, and then Reuters took over, so I lost the charts. All right, maybe while you do that, I'm going to go to Victor in Paramus, New Jersey. Victor, how are you?
Good. I'm looking for BHP.
Yes.
BHP.
So that's BHP Bulletin. Yeah, I can't believe... just a minute. I'm looking at this. I can't believe that I've lost all my notation. I would have to find it in a different library, and I'm just going to do this real quickly. Boy, am I getting frustrated with this. Just a waste of time. Why should I have to do this each time? I do it very quickly, but that's not the point. Whoops. I do it quickly, but I make a little mistake there. Okay, so folks, we're looking at A, B, C. So this is BHP Bulletin Limited ADR. So are they refiners? I never remember. They're refiners?
Yeah.
Yeah, okay. So they're trading at, BHP's trading at 64.82, down $1.08. And my question to you, Victor, is going to be, do you have a position? Did something happen? Oh, Victor. Sorry. Victor, I wonder if you're able to call me back, because I didn't get whether you were long. I'm going to do it. I tell you what, I'm going to do it just the way I'd like to do it. I don't care whether you're long. I don't care whether you're short. I'm just going to do the chart. The way the chart is looking right now, the weekly chart, just as I was looking at with the Garo at APA, this is even a weaker chart. It's not good at all. I don't know if you're looking to go long. Personally, I would not touch this on the long side. It is looking terrible. In fact, I have a target for it of a retest of the low, a major low, and that major low will be at 63.62. That's only $1.25 away. But I have to tell you something. It went to peak A, B, C. When my charts fail at a peak C minus, which is exactly what might be happening right here, I'm putting in a C minus. That says not only can it go down to the left side low, be really careful, because if it breaks that left side low, you've got to look to the next time sequence, and that's the weekly chart. And that weekly chart says you break under that, the very next level of support is at 62, not the end of the world, but it is the end of the world if you are long instead of being short, 62.60. So, that's right, BHP, largest Aussie company. Thank you, Pete. Yeah, I just rang a bell there. I completely forgot about it. I would not touch it on the long side. If you are short, I would say you could put a stop in on a portion of your position at 66.50. 66.32 is the 9-period moving average. I don't think it's going to bounce there. And then I would re-short it if it broke underneath that 9-period moving average again. Basil Chapman, Tiger Conditions. Oh, nice rebound, down -47. S&P's down 361. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Let me just finish this one up here. This is feeder cattle, continuous contract. I do not trade these. I just have a lot of fun tracking them down with the Chapman Wave methodology. Now, there's a pattern that I call, besides the cup formation, it is called the overlapping wave. It means that when you go from a most obvious low bar and you start to move up, very often it's B, most of the time it's at peak C. What happens is you start to pull back, and it looks like it's just a sideways move using time. And then within that, you get another buy signal that goes to a buy mode, and then the left side high, that was either B or C. In this case, I'm looking at feeder cattle. This is the continuous contract, and that's back on the 16th of December. It's at 169, but the number changes because it gets smoothed out. Gets taken out by the same letter. In other words, peak A, peak B, pulls back, a little mini peak A, I call it gray A, gray B, and then as it passes that high of the 16th, that's a combine. That's where you're coming off the highway, going onto the highway, and you have to speed up to get going, and you actually want to beat the other traffic if you can, or you want to do it as safely as possible. I don't want to get into some moralization here, but it's a powerful move, and that takes you invariably to a C and then a D. If it was an overlapping C and you were in D, that says you go to a very strong D. Then be careful, because you can come back to the lip of the left side. There are two ways of looking at this in the Chapman wave. But even more important, we have got in the weekly chart a leg D coming up if it crosses the high of October of last year, which is at 169.95, whatever the high was in the weekly chart. So feeder cattle's looking great. Very, very strong. Now, a question about MU. Oh, I hope I got time here. MU. There it is. MU has been a monster up. And what is it? It is Micron Technology. They just did everything right. So they go all the way from about $4 back in 2011. And they hit what? They hit 2 days ago. They hit a high of $24.50. Now, I've got leg F in the weekly chart, D in the monthly chart. No technical inconsistencies there, but the daily chart is saying be careful. That gap was like an isolated final thrust to the upside. I'm watching this. If by Wednesday of next week, by the close of Wednesday next week, if 24.50 has not been taken out, Micron Technology has just made a shorter-term top and is going to take a sideways consolidation. I would be not long. I'd be waiting for that sideways move to finish. Now, let's go back to the market that we were looking at. I want to give you all the numbers that I'm looking at here. The Dow is still at 84% in the stochastic, and the MACD is just now, the day is young, but at this point it looks like it's crossing negative. I'm looking at this and I'm saying with my four Dow horsemen, GE, IBM, Triple M, and UTX, at the close today is going to be really important for a couple of reasons. I've been wanting to inaugurate the whole idea of starting the shorts on the indexes, which I have not done in a long time I shouldn't say for a long time, well, for a while. And I want to start doing that. But I need a lot of evidence before I feel comfortable doing anything more than one particular index and maybe adding. So I need to look at the close, number one. Number two, we went long a stock this morning that in a sector that I've been trying to short unsuccessfully, the NASDAQ Biotechs, the IBB area, for ages. I know that this is a sector that's close to making a major top. I don't mean a major top. I mean a top that has time and price to the downside. So we went long a stock this morning at just about the exact low, and it's up. How this particular stock treats me for the rest of the day and into tomorrow, I think is going to be a really good clue as to where we are. If we stopped out, that's one tight stop, 2 points on a $280-something stock. But this, to me, I look for clues, and this is going to be a clue. G is a clue. There's
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.